Hey Gartner team, I'm Brian Skinner, a financial advisor who helps professionals just like you get the most out of your benefits. Today we're going to talk about one of the most valuable, but also one of the most misunderstood parts of your benefits, the Employee Stock Purchase Plan, or ESPP. Many employees overlook it, and that can mean missed opportunities or surprise tax bills. But if you understand how it works, the ESPP can be a powerful tool for building wealth. So let's break it down step by step. The ESPP lets you buy Gartner stock at a discount using after-tax payroll deductions. Here are the basics. You get a 5% discount on the stock's closing price at the end of each offering period. You can contribute between 1 and 10% of your pay. This includes bonuses, commissions, and overtime. The IRS does cap purchases at $23,750 a year, which works out to a little less than $6,000 per quarter in 4 offering periods a year, and stock is purchased at the end of each period. And since May 2024, any leftover payroll deductions that don't buy a full share now roll over into the next period, so nothing gets wasted. Enrollment happens in Workday during these set windows: February 10th to 28th, May 10th to 31st, August 10th to 31st, and then again, lastly, November 10th through 30th. Once you're in, you stay in and enrolled automatically each year unless you make a change. You can adjust your contribution rate one time per period. All you have to do is just update it in Workday. Or if you want to stop entirely, you can withdraw out of the plan and your deductions will be refunded back to you. After your first purchase, your stock goes into an E-Trade account that's created just for you. From there, you can sell shares online or by phone, but remember, there are trading window restrictions, and shares must stay with E-Trade for at least 2 years from the start of the offering period. The 5% discount is like free money. If you buy shares and sell right away, you lock in an instant 5% return before considering taxes. But of course, taxes matter. So here's what you need to know. There is no tax due when you buy the shares. You don't owe anything at all when they're granted to you or you purchase them. There is what's called a qualifying disposition. If you hold the stock for at least 2 years from the offering date and 1 year from the purchase date, the discount counts as ordinary income on your tax return, but the rest is taxed as long-term capital gains. That's the best outcome. That ordinary income, that's phantom income. You'll get a tax form for that at the end of the year. There's also what's called the disqualifying disposition. If you sell earlier, the entire discount is taxed as ordinary income. Any extra gain is short or long-term capital gain, depending on how long you held. At tax time, expect to see forms like a W, a 3922, or a 1099-B from E-Trade. You can get them directly in your E-Trade account. The big pitfall is selling too early without realizing how taxes work. That can mean paying a lot more in taxes than you need to. Now let's talk strategy. While ESPP is a great benefit, you don't want too much of your wealth in Gartner stock. It can be volatile. Remember, your paycheck, your bonus, your investments will all depend on the same company. That's some very serious concentration risk. And there's a lot of examples in history where that has not gone well. A common approach is to sell as soon as it makes sense to, tax-wise, and then reinvest them in a diversified portfolio. Things like index funds that spread out your risk amongst hundreds of high-quality companies. Don't think of ESPP in isolation. It should fit into your overall retirement plan alongside your 401k and other taxable investment accounts. As you can see, ESPPs are simple on the surface, but get really complex when you factor in taxes, selling strategies, and how to integrate it with your overall financial plan. And that's really where a financial advisor can help, making sure your ESPP integrates with your 401k, your tax strategy, and the rest of your long-term goals and financial plan in general. The right plan can help you avoid costly mistakes, lower your taxes, and make sure you're really maximizing this benefit. If you're a Gartner associate and you want to make sure that your ESPP is working as hard as you are, I'd love to invite you to a complimentary financial planning strategy session. We'll take a look at your benefits, uncover potential tax-saving opportunities, and build a roadmap specifically tailored to you and your unique situation. Just click the link in the description to schedule a private 45-minute Zoom session. I always enjoy doing these Zoom sessions, and I promise you'll learn a lot. Don't leave money on the table. Take control of your ESPP and your financial future today. If you found this video helpful, please like and subscribe, and then hit the notification bell so you don't miss any more Gartner-specific insights from a planner who specializes uniquely in Gartner financial planning. I'm an independent financial advisor, and to share this with your colleagues, chances are they'll love it, so go ahead and do it. If everyone at Gartner can watch these videos and get as much value from it as I hope that you did today, that would be a really special thing. If you found this content helpful, you found it informative, awesome. Subscribe to the YouTube channel, connect on LinkedIn. I'm going to be putting out more content just like this. If you have other questions that are a little bit deeper that I wasn't able to dive into in this video, or you have questions about how it pertains to you individually, awesome, totally okay. Go to the link on my website. There's a space where you can book some time with us. I'd be happy to talk to you about it. Help you as much as I can. It's complimentary. I'll point you in the right direction. If you have other questions, we can tackle those too. Thanks so much for joining us. Have a great day.